Hi, Dominique, and welcome to another edition of the week ahead. Hope you're well.
Thank you. Very well. And yourself?
Yeah, I'm okay. As we always like to do, let's kick off with kind of what your assessment, data, speeches, kind of market reaction for last week. So what do you think?
So it went my way in general. Let's start with the Fed. We had actually a big lineup, 10 speakers, dovish, hawkish. So I just looked at where the market pricing of the terminal rate was at the end of this week, so yesterday relative to a week ago, and it's up 20 basis points. So I'm taking it as a sign that the hawks are winning the battle. What was especially
that's interesting because it doesn't feel. It feels like, I guess it just feels like bond market's kind of treading water now. After,
yeah, which, as we discussed, could be due to positioning.
Yeah,
I mean, this has been an unbelievable year. A lot of people have done very well. They just want to lock in their gain and catch up their breath. And so the big price action may not happen until next year, basically.
Yeah, it feels like it. Yeah.
But what, of course, delighted me was Jim Bullard. He had another presentation talking about terminal rates that could go up to 7% based on the Taylor rule, which is what I've been saying since April. So, Bullard has been a bit of a bellwether for the whole of the FOMC. So I was really delighted that he was coming closer to my views. Other than that, we had the usual, actually it's getting earlier and earlier, but now.
Okay, just to touch on that for a second. Were you surprised that the market didn't react more to his comments? Like, is it almost now different times during the year, the markets kind of believe the Fed or not, or Powell. And now it's like we're almost into this point that for whatever reason, and it could just be people coming up with a narrative around the positioning unwinding, but it feels like the market doesn't view rates going much higher, even though he was making a comment like that.
So, I mean, we need to be about specific on which market. I thought the equity market reaction to the 20 basis point increase in the terminal rate was very muted. I mean, it's down 1% on the week. So I think some of it is fatigue. And also when you get hit by extreme news, at some point you become numb. So we have the positioning, the fatigue, and yes, there is still a denial. Remember, we were talking about the 5 stages of mourning, and we're still, I think, in the denial phase.
And I guess the dollar has been fairly weak for the last couple of weeks.
Very much so, yeah. Which, by the way, supports a lower dollar, supports a higher terminal Fed funds. But I mean, there again, I think people just want the year to end. And the other thing to me, what was interesting, is that we had again in the public sphere a debate between FOMC members, which would tend to, under just a year ago, would have been private. So we had Daly and Waller exchanging bids on where the terminal Fed funds should be. Actually, it was Bullard making his 5% is a bare minimum. It's more likely to get closer to 7%. And Daly saying 4 3/4 and 5 1/4 would be a good range. And I mean, it's a little, it's just adding to the noise, right? Because we
right. There's a few cross currents. Okay, makes sense.
And we are still well ahead of the next FOMC meeting. What, 4 weeks? I mean, we have the minutes next week. This lack of discipline of FOMC.
And you had oil selling off a lot. There was some other thing.
Yeah, fair enough. More noise. So that's the Fed. Then in terms of the data, retail sales were very strong, which is consistent with my view of resiliency, growth resiliency.
Any question about that retail sales? Because I guess I was surprised the bond market didn't sell off more.
Again, fatigue, positioning, all of the reaction may well happen once Christmas is behind us.
I guess there was Target, there was a few other things going on, like saying
for sure.
Target, maybe more real-time data. Sales is slowing or whatever, very recently, last 2 weeks or something.
Or Target customers are moving to Walmart.
Target, yeah.
So lots of moving parts, to be fair. But yeah, I mean, given how strong the data was, I'm surprised by the lack of market reaction.
Okay.
We just have to be patient. Okay, so this week, what do we have? The Fed minutes. And so the Fed minutes are going to tell us, I think, again, that it's likely that the Fed is going to move to 50 basis points in December or in January, but at the same time, it's likely to raise the terminal Fed funds, which has been the consistent message with most of the FOMC speakers. I suspect the market is going to pay more attention to the 50 basis points than to the higher terminal rates. In terms of the 50 basis points, to me, December is not a done deal. In fact, Waller, in his speech, Waller, who is one of the more hawkish FOMC members, said that he was comfortable with slowing to 50 in December, but he would have to see the next PCE inflation report and the next job report before making up his mind. And on PCE, it's not this week, it's next week, but it could be a bit higher than the CPI because of this weird story about health insurance.
Right, you wrote a cool article, right?
This was my weekly, so I wrote a detailed analysis on that, but basically we're not going to have the decline in health insurance in the PCEs that we had in the CPI. So we could have a closing of the gap. Right now, PCE is below CPI, but I'm talking about core services here, but that gap could close. Anyway, that's for next week. Otherwise, for this coming week in terms of data, so capital goods orders, so durable good order, including capital goods, which is the one I'm looking at. I think the consensus is a little too timid. I'm looking at what consensus is for non-defense capital goods orders, excluding aircraft, which tends to be quite correlated with CapEx, especially capacity CapEx. And the consensus is 0.1% month on month, which is, very little. Yet you have stories about SPX companies actually lifting CapEx in record number this quarter.
Oh, wow.
Which is consistent. Which is consistent with what you were saying about the dollar. It's not only that it's come down over the past few weeks, but it's been range bound for a few months. Also, I think there was this fear of recession propagated by the clickbaiting medias, which is not happening. So let's see, but that's another number that I suspect could surprise on the upside.
Right.
And this quarter, for once, I'm paying close attention to the Atlanta Fed GDP now. So last I looked, it was up to 4.4%. Obviously, we've discussed before, it's a very volatile number, but given that I'm concerned about risk of a pickup in growth this quarter, I'm paying more attention.
Sounds pretty high. Yeah. And what do you know what's the street predicting for this quarter?
Below 3%.
Below 3,
So other data, we have the S&P PMIs for the US, which I tend not to follow too closely because S&P releases only 2 years of data, none of the underlying indices. So if they want my attention, they have to be a bit more generous with the data.
Right.
So I'm paying more attention to the ISM PMIs that are released at the beginning of the month and give us a full rundown of the data. Then we have jobless claims, but there is nothing exciting there. It's still at a historical low.
Still not really moving. Yeah, it's not moving.
Yeah. And then there is Thanksgiving on Thursday. So
Yeah.
it's going to be a short week. And we'll all be very happy about that.
Yes. And yes, as we were saying before, I will be celebrating it, as I always like to do with some American friends. So very excited about that. And then I guess just like a heads up to our clients and listeners, as we've been doing kind of the last few months, just highlight a couple of interesting reports, say for our professional clients, their rates weekly, where we kind of break in again on our trade idea, which definitely seems to be working. 2s, 10s, flattener in or inversion in the US. And then in addition, Henry goes deeper into Bank of England and kind of what's priced in. And this is after the budget announcement from the UK government, which I will say, probably like others, was definitely a big disappointment and pretty sad how they're approaching kind of entrepreneurship in the UK, and also kind of the middle class and taxes and incentives. So I thought the macroscope, Billal's macroscope, was super cool, looking at the tax haven. Speaking of that, tax havens around the world. Somebody told me that I'm crazy and there's nothing the US can do. But besides this, my feeling is that the US, with everything happening with FTX, like they're going to go after this. Either they can pressure these governments, by the way, could even include Puerto Rico, and certainly across the Bahamas, Caymans. Interesting to see how that is. And he kind of broke down, actually, there's even potential market impacts. For our prime clients, a few cool things. Who cuts first? I thought was kind of a cool thing from developed markets. Obviously, we're not expecting any big cuts in the near term. Certainly, if you read any of our stuff or listen to any of our weeklies, but obviously it's kind of interesting thing to look at. Billal put some funny stuff together about the World Cup, and of course, trying to use data and some thoughts around it. So I think globally we're all kind of excited, and now we're getting more into it living in the UK. So of course we have to get into watching the World Cup. So I think that should be fun in addition to Thanksgiving. So another reason for markets to be probably fairly quiet this week. And a new, I guess, kind of contributor, very active contributor, Richard Jones, awesome guy, who wrote a really interesting piece on farmland, another alternative asset, stuff we've looked, we worked with some partners in the past on this stuff. For me, I'm also very interested. So a lot of cool pieces that people should check out. And as always, I think continuing to really get a lot of good feedback and interaction last couple of weeks, especially with you, Dominique, and which is awesome. And I know that you really appreciate that, as do we all. So any parting thoughts or?
No, I'm also looking forward to Thanksgiving. It's my favorite holiday of the year. I mean, sitting down for a good meal with family and friends, I can't think of anything better than that.
Agreed.
So wishing a happy Thanksgiving to our listeners who are celebrating, and good luck on the markets to everybody else.
Cool. Awesome. Okay, cool. Thanks, everybody. Good luck.
Bye.